Hello, everybody. Ignatius L. Jackson, CPA here. I wanted to chat with you today about a tax tip. As you can maybe see from my sunglasses, or you may be asking yourself a question, why is he wearing sunglasses in this video? We're talking about my latest article that I posted on LinkedIn. It's called Business Owners Don't Take Vacations, They Take Business Trips. So the purpose of today's tax tip is to go over some key strategies in terms of being able to take a tax deduction on your business trips instead of taking vacations. And so that's why just thought I'd throw my sitting in the sun on the beach, cool shades for the first part of this video, but we'll go ahead and take them off now. I think I made my point. So ultimately, there's a few things that you want to consider before you take deductions for your business trips. And so ultimately, some of the key factors is you want to be able to have some business appointments set up prior to taking the trip. So whether that's a conference, a training, looking at some rental properties that you own, stuff like that, you want to be able to justify the need for the trip. Once you've done that, then obviously you can go ahead and book your travel. And generally speaking, if you do things the right way, you can take a deduction for pretty much 100% of your airfare, hotel, not your food, but hotel, rental car, stuff like that. For your food, it's generally going to be 50%, unless you can tie it in with some kind of an advertising activity, such as you throw like a huge picnic for the community, or you invite a bunch of potential clients to some activity where you're advertising your business and really trying to gain a lot of support. So there's definitely ways that you can work around that 50% deduction, but you want to be careful there to make sure that it qualifies. But generally, first rule of thumb, definitely make sure you have some business appointments set up. Second rule of thumb is to ensure that your whole trip is business related, or if it's not, that at least a good chunk of it is business related. And then you want to kind of allocate the business portion to personal and business use. So general rule of thumb there is, if you can basically take a travel day to get to where you need to go. So if you take the first flight out, you can take the rest of the day and kind of do whatever you want for that day. The next day, you would need to do at least 4 hours of business activity for that next day. That can be any of those things that I mentioned earlier, like going to a conference, doing some sort of training, having business meetings with clients, that kind of a thing. So that would be the thing you would do for that next day. And then you basically get a travel day back. So you could take if you have business meetings of at least 4 hours for one day, then you can basically take 3 days for a trip and have that be a business deduction. It's generally how it works. You should generally try to make sure that it's something, though, that you maybe couldn't do over the phone, or that you can't do some other method, something that really is kind of necessary for you to be in person. And the next thing would be kind of like a pro tip would be, you can kind of sandwich it between weekends sometimes. So if let's say you travel somewhere on a Thursday, you have a conference on a Friday that lasts 6 hours. Then on Saturday and Sunday, you're kind of just relaxing by the beach. Let's say it's in Florida, somewhere nice and awesome. And then on Monday, you have another conference you go to. That's another 6 hours. Or let's say you have rental properties there that you go around and look at and make sure that they're getting taken care of, or you're doing some maintenance on them or something like that. So that's another 6 hours of business. And then the next day, let's say you go ahead and travel back home. So all in all, let's say that was a Thursday, you travel. Friday, you had business. Saturday, Sunday, doing whatever. Monday, your business again. And Tuesday, you're traveling back home. That's about 6 days total of business-related travel that you can basically write off on your business taxes. Now, obviously be careful. You don't want to have a bunch of travel expenses when you're not making money. So these tips are definitely for people who are profiting substantially in their business and they have some legitimate reasons for why they we need to take these business trips. So don't do it just to do it. Make sure that it's for a legitimate reason. Document is the key here. Make sure you're documenting what you're doing, and obviously consult with the tax professional if you have any questions or you have any concerns, just to make sure you're protecting yourself and you're doing things the right way. So any tax tips I give you, definitely make sure you're consulting with a professional. If you don't have one, we're happy to help you here at Ignatius L. Jackson CPA. If you do have one, definitely reach out to them and get their thoughts on it. If they're not willing to do what it takes to save you on your taxes, then we're also happy to have that conversation with you as well. So, but those are just some initial tips. Definitely take a look at my LinkedIn article. It has a lot more information and details in it in terms of some strategies and things you could do with the business trips. But just wanted to kind of give you this little video to explain a little bit more about all that good stuff. And if you have any questions, feel free to reach out to us. www.iljcpa.com is our website.